Hi, this is Shane with the Rational Trader. It is Monday the 12th, 7 minutes before the open. Let's review what kind of what we did over the weekend after, or what I did over the weekend after Saturday's machine learning overview and tutorial webinar. One of the things that we've been looking at is choppiness, and so I made some changes to the model and then retrained the models to address that, and then did some testing of them. It appears to be clearly an improvement, but it's not quite the answer there may not be an answer per se, but the idea is that there's two ways to address an issue. You can externally impose logic, like if this moving average is at that value, then do this, or you can give the system the data to figure it out itself. And from the machine learning world, that the latter is what we want to do. Exactly figuring out how to give it that data is challenging, while not breaking everything else that is working cleanly. And so, fortunately, we have a very structured process to make those kinds of changes and then evaluate them. So I did that over the weekend, and what I saw was, just in terms of converging to the solution, I saw a fairly dramatic improvement in the pullback behaviors. You end up taking less trades, missing some good ones, but you avoid lots of nasty ones. It's kind of how that worked. So typically that's what we're after. More in terms of the spectrum between aggressive and conservative, or between there's another way to look at that in terms of I guess reliability would be the way to put it. I don't want to use the word consistency. That's incorrect. Just in terms of reliability, I'm willing to give up. Gains if it means I can get more reliable. In other words, I'd rather make less on a more regular basis than be able to make more but have it be spikier. Okay, it's particularly in a foundation technology. All right, so the models trained on that latest data, and then a bunch of testing was done, though not quite as much as I would normally do, just because I didn't quite have the time. I added stop trading after hitting max gain. I'll show that in just a moment. And I made a change to the settings. Now this is actually interesting. In the spreadsheet here, what we have a value, this dark blue, that says when you place your limit order, how long to wait before you cancel it if you're not filled. And it was set to 4, which means you'll allow it to pop up and then come back to get filled, or fall through and then come back up to fill you for the short. And what I found with some fairly extensive testing, just using Sierra Charts Replay, is that 4 is not that optimal a number. 1 is a better number, which means you got to get filled on the next bar. This is for the NQ. And just thinking about that logically, it makes sense to me, because the system is trained to find the instance where the market moves 30 ticks in one direction before it moves 10 ticks in the other. And so in many respects, if you just think about that intuitively, you're looking for that pop, and you kind of got to be in the market when that pop is happening. In any case, I've changed it to 1 as a result of that. And then the max loss and gain. The max gain is here. I have it set to 10,000 because I was testing. So a reasonable number to set that to would be, something like 400, maybe 20. If you caught 20 points in the market, you'd be pretty happy with that. So let's do that. Let's set that to 400. And what I was doing was testing I was testing the old model and the new model using I was also testing the new model, and then I wanted to see, but I had a couple of days where I hit that max gain value. I wanted to see how far it went if I didn't have that in place, and it went quite a bit higher. So we'll leave that at 400 for today. A lot of work on the programming side, getting ready to support more than one market at a time. Okay, so that's what that last one is. That's got to get tested now. So that's my major effort this week, is testing the server, running multiple symbols at once. Okay, and then taking the final update here is taking the changes that I added to the modeling to support, to address choppiness. I retrained the ES. It's actually finishing up just right now. That's very interesting. The initial review shows a nice convergence to solution for the pullbacks, longs and shorts, even better than before. But the turns look kind of ugly, so that's interesting. We'll have to walk through that and see how that behaves. I made one other change to the NASDAQ here. I changed basically the definition of moderate by taking out one particular code. That's something we'll review on Saturday, on Saturday's machine learning tutorial. Okay. Basically, I removed something that was sort of consistently hurting me last week, in terms of just it's being just a little too aggressive under the current volatile conditions. So market went short and is now at 10 ticks, so there's no risk there. It remains a question if that's a reasonable trail method to use in this world, right? So as a human trader, I would never trade that aggressively. I would I let the retracement occur and then move the stop is basically what I do, or get 20 ticks in the NASDAQ. That's how I would normally trade it. I do see repeatedly that you get taken out before you take yourself out of trades by doing that. I do see that it saves you. So I haven't done really extensive studies yet on the kind of the best way to do it live. I did extensive studies in batch simulation, but they're just a guideline now for how would you do it for real. The problem with those batch simulation programs is that they use a very sort of stupid trade management method, because it's complicated, and I didn't want to spend the time coding that. So there, we just went long actually on a pullback code and filled. So now we'll see. This is a good example of something I wouldn't do as a human. I wouldn't place that order long, short, and then get taken out and then immediately get long like that. So we'll see if that works out for us or not. Looks like we're going to get tagged. All right, so tagged there. So short now off of a 286. That's a failed pullback. That's a really aggressive looking trade to me. At scratch, so I kind of don't care. Let's get out our spreadsheet and see exactly what that is. So 286 is here. So it's a moderate pullback long that failed. Okay. So there's conservative, moderate, and aggressive pullbacks, and you can think about those in terms of, well, how much did it pull back, right? So, that's an aggressive pullback. That's more moderate, and that's more normal. And then, of course, the market the concept of the pullback is going to continue up from there. So we have that level of granularity in there to help you choose how aggressive or conservative you want to be. And what I'm doing is this blue set, which includes the green, all right, and that's sort of moderately aggressive. So green only would be conservative, and then green plus blue would be moderately aggressive, and then the green plus blue plus this brown would be aggressive, and the red is insane. You can do it if you want, but I don't recommend it. So these are aggressive pullbacks that fail, and they actually model profitably. But man, you've got to have a liver of steel to do it, because what ends up happening is the market will be advancing strongly, pulling back, advancing strongly, pulling back. Typically, you want to be going in that direction. When they fail spectacularly, and so it's a good case where in batch simulation you can't really see very well when those, what the failures and what the successes look like. I would have to dig into that quite a bit more with quite a bit more detail. And I don't really have time to do that. And I typically, just logically, that's not a trade I necessarily want to go after. So I'm not that worried about it. But here now, as we're doing things live in real time, in human time, in actual time, we can look at it as it happens and see. So we hit 30 ticks, and now we're out waiting for the next trade. So the machine learning system that I built does not enforce stops or targets. That's completely up to you. What the system that I built does is make a prediction, and then it's the Sierra chart study that executes that prediction. So I'm just using this simple bracket order type up here, simple bracket with, oh snap, I changed it. With a target of 30 and a stop of 10, and then the first break even is offset in ticks triggered of +1 after getting 10, and then what I do is if I get 20, then I trail by 20. That's what I've been doing. You could, but any order type you can do, any order type that Sierra chart uses, you can execute, of which there are many. So I need to dig into that, because this is not my preferred trail method. But at the same time, I'm not entirely sure what I think is best for a machine learning system, because it takes more trades than I take as a human. So it would make sense that you would change the way that you manage those trades. And here we are at the end of the day. It's now just before 5 o'clock Pacific, plus 195 on the day. So that's 39 ticks. Let's see, where did I leave off? 7:15 is right here. This is when I stepped away. So it was unattended from here. We saw that awesome short there live. That's a failed pullback short. So the signal is that this pullback is going to fail. Wow, what a sweet entry. Okay, and then we get a pullback here, which is predicted for success. Right, the machine says get long. We get long right there and take a loss. Okay, so that one's red. And then down in here, 101 is in the too noisy to take category of turn signals. And then 236, I believe that's a takeable trade, but it is pullback short. I think it's gotten too noisy here. That's why there's no signal.
Same thing down here. 197 is in the insanely aggressive category, so I'm not taking those. 101 as well. That's the noisy turn. So I want to stay out of those that noise right for in these conditions. And then we get a, let's see. All right, so this is a turn long, which fails. So we take a 10 tick loss there. And then some noise, and we get a signal right there. Let's talk about this one because that entry is that's a long signal on those consecutive down bars. Okay, minor interruption there. Let's continue. Let's pick up where we left off. So this is looking at this pullback, and it's predicting that that pullback short will fail. So get long. I just love that entry. This is something the machine learning system has taught me, that pullback failures are a thing. Doesn't quite get 30 ticks. Instead, I make just a little bit there. 187 is in the too aggressive category, and so is 287. That's a short though, so you can see the 187 here is a little, just a hint too soon, but you can see we're starting to see that turn. Would have been nice to get a signal in here, but there's no prediction. Okay, so let's talk about this here. We're going to come back to the pink arrow. We got long here, all right, on a, again, it's a failed something. In this case, it's a failed turn short. So what the system is seeing is this turning behavior, pull back and then close down, all right, and yet it's predicting that that will fail. Again, this is not a trade that I would have taken. It's something I've never done before. The data clearly showed me that it is viable. Something like 45% of the time, when it doesn't do nothing, that turn fails as it happens. So the system machine predicting that the turn will fail, get long. We get a very nice entry there. Get out 30 ticks later, and you can see there's quite a bit more there to be had. So there's opportunity there for when I'm trading more contracts. Okay, so that's the final trade of the session. The purple line is 9 o'clock, and I'm done at that point. So let's talk about this pink trade here, or the pink arrow. So that's a prediction short, 201, a short turn. It doesn't get filled. Okay, and in fact, it's interesting because what we see is that this is the noisy turn signal, but it's in the short direction. So it's curious, how the markets behave differently going up and going down. That noisy turn long is off the table, right, in these conditions. But the noisy turn short is fine. Okay, when the markets will peak out like that as people chase, and then they very quickly will fall. In this case, though, we don't get filled. And what I did this weekend was a lot of work around examining how long should you wait before you cancel the order. So the system placed an order right there at one tick off the low of that bar when it got the signal to short. And you can see that if we stick around, we'll get filled on that third bar, 3 bars later, and then take a loss. Now, what I found is that 1 bar is best by far. And so if you don't get filled on the next bar, get out or pull the order. And it makes a lot of sense intuitively when you think about how the machine learning system is trained, because it's trained to find instances where the market is going to go 30 ticks off the closing price of that bar before it goes 10 ticks in the other direction. And so if it pops like that, then that's what the system was looking for. And if you're not part of that pop, then get out. You need to pull that order. Okay, so that's something to think about. There are some order types that are worth looking at that I will be investigating, particularly for the ES. There's a limit chase order. I'm not entirely sure how that logic works, because there are cases where you want to be in here. You just can't get in because the market's moving too strongly. Those are the trades you want. So we got to take a look at that. But for now, my limit entry offset is 1, meaning my order is placed 1 tick off the close of the bar. And then if I don't get filled on the next bar, pull the order. Okay, so that appears that's working well. Plus 195 today, 39 ticks, and we'll see what tomorrow brings.